Well, Bitcoin, Dogecoin, Ethereum, Litecoin, and blockchain. Most of you are excited and talking about cryptocurrencies right now. So welcome to the one video where I'll explain you what is cryptocurrency, why was it invented, who invented cryptocurrency, how does it work, should I invest in cryptocurrency? If so, how can I invest? And finally, what are the dark sides of cryptocurrency? In the next few minutes, you will get answers to all your questions in the most simplest way. Now, crypto, which means secret, and currency, you all know it's a medium of purchasing goods and services. So, a cryptocurrency can be said as a virtual currency meant to be medium of exchange or as a store of value. Just like all other currencies like the Indian rupee, the US dollar, the euro, or the pound, cryptocurrency also has a value that can be used to purchase goods and services.
Okay, now I get what cryptocurrency is, but I have always used physical currency. Then what is virtual currency? And if the currency is virtual, then how can it act as a medium of exchange?
Don't worry, Nancy. Let me explain you in such a way you'll never forget. You might have used Amazon or Flipkart for shopping, right? So while buying any product, you might have noticed that sometimes Amazon gives you some points for shopping or by playing games. Now, cryptocurrency does exactly the same thing. Like it says, give me money, I'll give you points. And with the same points, you can do shopping, you can use them as normal currency or store them as a value. Cryptocurrencies have exactly the same characteristics of fiat currency. Now wait, I know what you're wondering. Fiat currency, isn't it? So fiat currency is a government issued currency that is not backed by any physical commodity such as gold or silver. For example, the US dollar, the British pound, or the Indian rupees. So all these currencies are called as fiat currencies because it is the government that has issued this currency.
Okay, wait. You told both physical and digital currencies can be used to purchase goods and services. Then what is the need of inventing digital currency? I mean, when people are acquainted with physical currency, then why they need digital currency?
Hmm, that's a good question. To understand this, let me show you some news articles and banking errors which you might have seen earlier. 2008, hyperinflation in Zimbabwe. 2013, Cyprus government has seized its own citizen asset. 2015, China decreased the value of its own currency. 2016, demonetization by Indian government. And again in 2016, hyperinflation in Venezuela. And some of the regular banking errors which you might have seen, like technical issues while transferring money from person A to person B, slower international transfers and high transaction cost, exceeded transfer limit, and many more. Now, do you know all these problems were caused by a single source, that is because of a third party middleman? The middleman here can be the bank, the RBI, or the government. But the one who suffer from all these events are the common people. Confused? Let me explain you with the solution. So in 2009, a techie named Satoshi Nakamoto published an 8-page paper that says there should be no middleman involved in between any financial transaction. So what he invented is a digital currency called cryptocurrency. And as of now, there are over 18,000 different cryptocurrencies invented by people. Some of the most popular cryptocurrencies are Bitcoin, Ripple, Ethereum, Dogecoin, and Litecoin.
Okay, I'm aware of all this news, but can you tell me how cryptocurrency can solve all this problem?
Of course, so cryptocurrency has three important pillars which make it so powerful in today's market. Number one, cryptocurrencies are decentralized. Number two, cryptocurrency is more secure than fiat money. Number three, it is a practical online payment option. Now let's understand what decentralized means. So decentralized currency are those which are not subject to the control of government or financial institution, whereas fiat currencies like rupees or dollar or pound are centralized, that is, they are controlled by the government. For example, let's say our government wants to print currency, so it can print as much as it wants, which may result in inflation, and this has happened in the case of Zimbabwe. However, in cryptocurrency like Bitcoin or Ethereum, they are completely decentralized. That is, the government do not have any control and cannot produce more Bitcoin on its own. So it can be said that cryptocurrency will act as an inflation resistant. Similarly, in 2015, the Chinese government purposefully devalued its own currency. Now, you might be thinking that by doing this, China would have suffered a big loss, right? But no, China decreasing the value of its own currency had greatly impacted the US stock market. And the reason is currencies are always interconnected with each other. So there is always a risk to the world if any government manipulates its currency. Let me give you one more example. Today, the government says the value of this paper is 100 rupees. But in 2016, after demonetization, the value of 500 and 1000 rupees notes had no value in the market. Our entire life, we run after this money. But in the end, the control of our money lies with the government. The truth is, the value of this paper is 100 rupees because your government says that 100 rupees has a value. That's it. Now, some people did not like the idea of bank and government agencies having control over their hard-earned money, which gave birth to a decentralized currency called as cryptocurrency. Now, let's find out how cryptocurrency is more secure than fiat currency. So, behind this cryptocurrency, there is a technology called blockchain. This technology makes cryptocurrency much more difficult to hack and manipulate. So blockchain is essentially a digital ledger of transaction that is duplicated and distributed across the entire network of computer systems. So to understand blockchain, let's understand what a ledger is. So a ledger's work is to maintain a copy of transaction. Now all the transactions are maintained by the bank, but let's say if there is any fraud happening in the bank and any transaction is removed from the ledger, then what? Because blockchain technology states that no entry can be removed, people have their own computers where any transaction that occurs must be registered on each and every computer that is linked in a peer-to-peer network, and the transaction must be verified in each computer. Now, if there is an error in between, then there will be no further verification done. As your ledger is maintained in many different computers and in different steps, no one can manipulate the figures or transaction. In fact, many people believe that since blockchain technology is being used, it is very reliable. Moreover, blockchain technology is not only used in the finance sector, but also it is used in education, healthcare, data management, and much more. Now, coming to the third point, a practical online payment option. So, cryptocurrencies can be spent and received by anyone, anywhere, and at any time without the need of the bank or a government. This is what makes them so revolutionary. Now, cryptocurrencies are often much cheaper and faster to send than traditional fiat currencies.
Wow, I see there are so many advantages than traditional fiat currency. Can you tell me if cryptocurrency is legal?
Yes, it is 100% legal to invest, hold, and trade in cryptocurrency. In fact, India has the most cryptocurrency holders than any other country. But unfortunately, cryptocurrency is not yet a legal tender of money, which means you cannot use cryptocurrency on behalf of money. I think it's the same with stocks, right? You cannot go to a store and ask for 5 kg sugar in exchange of one SBI share. So as of now, you cannot buy things using cryptocurrencies in India.
Hmm, that's interesting. But can you tell me if there is no regulatory body, then who controls the price of cryptocurrency?
Okay, listen to me. In every cryptocurrency, it is already decided that how many coins will be produced. For example, the total number of bitcoins are fixed, that is 21 million. And you know, when anything is fixed and limited, then its cost is decided by the demand of the product. Let's say a person named Robert owns a land and he wants to sell it. Now the dimensions of the land is fixed. If more people want to buy the land, then the price will be higher, and if less people want to buy, then the price will reduce. Similarly, the price of cryptocurrency is also maintained. If more people want to buy a particular cryptocurrency, then the price will increase. If less, then the price will decrease.
That explains, even if there is no regulatory body, how the price of cryptocurrency is controlled.
Good. Now let's learn how a Bitcoin transaction actually takes place. For example, let's say when A transfers some money to B using internet banking, this transaction gets verified by the bank. However, when this transaction happens through cryptocurrency, there is no intermediary in between. Now, does that mean the transaction is not verified? No, that's not true. So the question is, who will verify this transaction? So in cryptocurrency transaction, there are thousands of people in the world who are wanting to verify this transaction. These people are called as miners. Now, what happens is that when A sends some Bitcoin to B, no one will say in plain English that X amount of cryptocurrencies has been transferred from A to B. It will be written in some cryptic language. Basically, it's a mathematical problem which someone has to solve. Now, these miners all over the world will try to solve this maths problem using high powerful computers. And once they solve this problem, they will get reward as Bitcoin. And this is how Bitcoin is mined.
Okay, that's a lot of knowledge on cryptocurrency. Now, can you please guide me if I should invest in crypto?
You seem to be very excited about investing in crypto. But wait, let me tell you something. When you start exploring, you will see there are a lot of different cryptocurrencies. And the question here is, in which cryptocurrency you should invest. So, like in stock market, it is always advised to go for large capitals, which are known and who have a proven track record. Similarly, Bitcoin is a cryptocurrency which has the largest market capital, and alone Bitcoin has more than 65% of total market capitalization of all other cryptocurrencies. Now, before investing in Bitcoin, one must note that Bitcoin is highly volatile in nature. So let's have a look at the past values of Bitcoin. In 2017, the value of one Bitcoin was $13,000. In 2019, the value of Bitcoin is reduced to $3,500. Similarly, the value of one Bitcoin in 2020 March was $6,000, and then it rallied up to $61,000 per Bitcoin in October 2021, and currently, as we speak, the price is around $31,000 per Bitcoin.
Now hold on, $31,000 for just one Bitcoin? Isn't it too expensive? I don't think I can get a single Bitcoin.
Wait, here is the catch. To invest in Bitcoin, you do not need to buy the whole Bitcoin. In fact, you can buy it in fractions, and that's the beauty. But can you do the same with shares? Unfortunately, no. You cannot buy 0.1 share of Reliance Industries, but you can buy 0.1 share of Bitcoin. Now let's learn how we can invest in cryptocurrency. Now, as cryptocurrency is a new asset class, it is imperative that we understand in detail before we begin to invest or trade in the same. There are various apps through which we can invest in cryptocurrency, like we have CoinDCX, CoinSwitch Kuber, WazirX, Neo, and lot more.
Now I can buy Bitcoin in fractions. That's interesting to note. But can you tell me what are the dark secrets of cryptocurrency?
Number one, in cryptocurrency, as there is no government authority involved in any financial transaction, in case of any problem, no one will hear your query. Number two, since it is a secret currency, people pay for unethical work. Number three, people use cryptocurrencies as tax evader. For example, I sold a product to my friend for 1 million. Now, 1 million is my income, and as per government rules, I need to pay 30% income tax because banks are involved in between and they keep a note of all the transaction. But if I ask my friend to pay me in Bitcoin, then government will not know who has transferred the money to whom. So people can use cryptocurrencies not to pay tax. Number four, the mining process is not eco-friendly as a lot of power and electricity is being used. Number five, cryptocurrency cannot be traced. So if a Bitcoin is incorrectly transferred to some different person, then no one can trace it. And number six, cryptocurrency is not accepted as a payment in most places. Now, overall, it's important to note cryptocurrency is an extremely risky asset and needs to be understood in detail before investing. At the end, it depends on individual who wants to invest how much on which cryptocurrency.